Hey everyone, and welcome to FinTech. In this video, I'm going to be talking about ethical investing, also known as socially responsible investing. This is an important topic for anyone who wants to grow their net worth, but also try to make the world a better place while doing it. In this video, I will be talking about what exactly ethical investing is, show you a couple different ways to find ethical investments, and finally compare the returns that you can expect from ethical investing versus traditional investing. So what exactly is ethical investing? Well, in short, ethical investing is when you invest your money in companies which you think provide a benefit to the world. This could be due to environmental reasons, social reasons. Any company which aligns with your ethics could warrant an ethical investment. Now, the reason this whole idea of ethical investing matters at all is because of what companies do with your money when you invest in them. Now, yes, when you invest in a stock, you get the benefit of the stock price going up, but the company you invest in also gets the benefit of having your money in their company. Now, this is a little bit harder to see with publicly traded companies, so I'm going to use the example of a private startup. Let's say you're a big investor and some small solar panel startup comes up to you and asks for an investment. So you give them the investment and they use your money to go out and buy supplies or maybe buy marketing material to help grow their business. Once that company grows large enough, you then take your share of the company and sell it to someone else for a profit. In this way, both the startup gets the benefit of having your money invested and you get the benefit of profiting off the growth of the company. It works basically the same way in the stock market, although it's a little bit more tricky to see. When you buy a stock in a company, you're indirectly funding that company through the value that you add to it through the law of supply and demand. Anytime you take out an investment in a public company, you are at least marginally driving the stock price higher. Now, company leadership can use that increased stock price to take out a loan against their equity or issue additional stock, which will dilute all the other stock. Either way, it comes out the same. By investing in a company, your money is going to contribute to whatever that company is doing, good or bad. Because of this, some people may choose to vote with their money and only invest in companies which they agree with their ethics on. So the next obvious question is, how do you find ethical investments? Well, there are a couple different ways. One is just reading articles online on different companies and what their ethics are. Another is just listening to friends and family and hearing what they have to say about different companies. But a lot of people might find these methods a little bit too wishy-washy and look for something a little more concrete. Well, there is a metric published by several different companies which seeks to quantify exactly how ethical different companies are in a couple different categories. The ESG score. Multiple different organizations publish their own ESG scores, including Morningstar and Bloomberg, but these can act as a good starting point for finding ethical investments. ESG stands for environmental, social, and governance. These are the three categories that companies are rated on for their ethics. The environmental category is pretty obvious. It's just what kind of impact does the company have on the environment. Social is anything related to social issues, including discrimination, human rights, or community relations. And then governance relates specifically to company leadership. How transparent they are, how independent the board of directors is, and how well they take care of shareholder money. You can find ESG data on individual companies by just Googling company name followed by ESG score, or if you want to, you can go to Yahoo Finance, search the company name there, and then go to the sustainability tab. On this tab, you can see the ESG score broken out by environmental, social, and governance. And then you can also see the total score for the company. All this data is provided by one of those organizations I mentioned, which provides ESG scores. This particular one is Sustainalytics. And then if you scroll down a little bit on this page, you can also see potential problem areas that these companies might be involved in. Now note that these ESG scores should just be a starting point. The scores can vary pretty dramatically from one organization to the other. So for example, Morningstar's ESG score for Apple might be very different from Bloomberg's score for the same company. Also, ESG scores may not give the full picture of the company. For example, if we look up Tesla's ESG score, we can see that they score really well for environmental, but a pretty bad social and governance score, partly due to the long hours they require from their workers, and also partly due to Elon Musk's notoriety online. But maybe in this case, all you really care about is Tesla's benefit to the environment, so you would consider them an ethical company despite these other categories. In this case, the ESG score can provide you a good starting point, but it won't paint the full picture for the company. You really have to dive in and analyze it yourself to determine if it's something that you want your money behind. If you're not interested in investing in individual companies, there's another way where you can make ethical investments without having to go through all the trouble of identifying each separate company. Socially responsible index funds. These funds are basically just baskets that include a whole bunch of stocks which all fall under a certain ethical guideline. Now that guideline differs from one fund to the other, and it's determined by whoever runs the fund, but they usually publish these guidelines online. When you invest into these funds, your money is automatically allocated to each of the individual companies within the fund, so you effectively own all the companies in the basket, which reduces the risk of any one stock going down, while also giving you broader exposure to a larger share of the market. Now, each index fund is going to have its own guidelines for adding a company to the fund. Some of them are going to focus on environmental causes like CBRN, while others are going to focus more on gender equality like the SHE fund. You can usually find the ethical guidelines for these funds just by Googling, for example, SHE fund ethical guidelines, and then replacing it with whatever index fund you want to look for. Now, I'll flash a quick list of the funds that you might be interested in looking into, and I'll also include a link to the Forbes article in the description where I pulled this from. So now we need to look at an obvious question which comes up for anybody who's considering ethical investing. Will investing ethically hurt my return on investment? I know it's a little bit awkward to say out loud the fact that you might put making money ahead of your ethics, but I think it's an important question to address because it's such an obvious argument against ethical investing, which I hear a lot. Ethical investing does drop the number of companies that you can look at because it filters them out just for ones that meet your specific ethical criteria, which on the surface should theoretically hurt your gains. After all, someone who has the freedom to invest in anything should make more money than someone who has to only invest in a specific area, right? Well, interestingly enough, when we look at the data, that's not necessarily true. Let's say, for example, you're really interested in gender equality in the workplace. So you'll only invest in companies which have a good mix of men and women in leadership positions. While this may seem like it would restrict the number of companies you can invest in and thus hurt your returns, when we actually look at the historical data, companies with a mix of men and women in leadership positions have actually outperformed the average S&P 500, possibly due to a greater diversity of ideas coming out. This has been shown by multiple studies from the likes of Credit Suisse and S&P. Similarly, let's say you were really concerned about the environment, and for that reason you made an ethical investment in a small startup electric car company 10 years ago. Well, if you had invested $100,000 in Tesla a few years ago, you would be a multimillionaire right now. Now, yes, that's cherry picking the data a little bit, but the point is investing in a specific ethical area doesn't necessarily hurt your investment returns over a long time horizon. The truth is, investing will always require you to pick a small number of stocks or index funds or mutual funds to put your money into. And any metric you set shrinks your pool of total investments, but that does not mean that it's going to drop your return on investment. You only need to invest in a few winners to outperform the market. You don't need to invest in all of them. So let me know what you think about ethical investing in the comments. If you like this video, make sure to leave a like. And if you don't want to miss out on any future videos, make sure to both subscribe and hit the notification bell. I'll see you next time.